Good morning, everyone, and welcome to our webinar series. I have the privilege today of introducing our speaker, Dee Campourglou. Dee is the Managing Director of AFC Investments Ltd, a boutique investment management house that invests funds on behalf of retirement portfolios, charitable trusts, and high net worth individuals. She has been with the company for 25 years and has honed her investment skills around thematic investing and behavioral finance, with a healthy dose of common sense thrown in for good measure. She graduated from the University of the Witwatersrand in the early 70s with a Bachelor of Science degree majoring in mathematics and statistics. She was followed by a higher diploma in teaching, which resulted in her teaching at a stint at Carlton Jones High School in Carltonville. The rigors of teaching maths to young men in this environment caused her to flee to systems programming, a new occupation that has led her to the new world of stockbroking in the late 70s. She was fascinated by the research field. So from systems engineer on mainstreams at JSE, she migrated to researching markets and companies, focusing on behavioral analytics. In her nearly 40 years experience in equity markets, she has held roles of head of research as well as of asset management and has witnessed and enjoyed 5 bear markets. She has managed the SAIMM investment portfolio since March 2000, and to balance her life, Dee is registered Bowen practitioner and an equine behaviorist. She lives in a small holding in Noordhoek, Cape Town, with her beloved animals, 3 horses and 4 Saint Bernards. So, without further ado, Dee, you can start the presentation, and if you have any questions, please note them in the Q&A section.
Good morning, everybody. Bear with me while I load my presentation. All right. I've been asked to speak on the outlook for the global economy. This is quite a broad topic given what is happening in the world right now and the very, very quick changes that we're seeing emerging post-COVID-19 year. So I thought I would start by just having a look at the year 2020, and what has happened in that time period, to try and give us some perspective on the impact that this year has made on our economic climate. So we'll have a look at that, then do some consequences. Some of them are short-term, some of them are, most of them are very long-term. Look at where the growth nodes where I think the major growth is likely to happen, and finally end up with some stats on outlook 2021 and beyond. So everyone has a look at the graph of, this is the graph of the all-share index. The world all-share index. And if we have a look at the beginning of January in 2020, China locked down and moved on in Jan 22. And only 9 days later, or 7 days later, when we see that the COVID cases have passed those of SARS, which had been earlier on the previous decade. A cruise ship down in Princess was quarantined a few days later, and you have Yokohama, 3,700 people on board. The first corona-related death arrived in the US on February the 6th, and the major COVID outbreak affected Italy, which we saw that recently just going all around the world. On the 11th of March, the World Health Organization declared COVID to be a pandemic. So I'm just trying to move this thing here. 91% of Americans were asked to stay at home, or ordered to stay at home on April the 2nd. In other words, only healthcare workers and frontline workers were allowed. In June, Germany, so there had been lockdowns all the way around the world. In June, Germany declared France reopened, Spain lifted state of emergency. July, the COVID numbers were rising again in Southeast Asia and China, and Moderna started its third phase trials for the vaccine. The spike moved to Europe and South America. On September the 28th of last year, COVID deaths exceeded 1 million people. In October, the spike moved to the US and to Russia, and global cases reached 40 million. And the first vaccines were started in the UK and Russia during November and December. So there with the backdrop of the world market, you can see the biggest panic in world markets happened in the period from the end of February to March, when in the space of less than 10 days, equities had lost 33% of their value. Longer term though, what it has meant for economies is very, very sharp recessions, 2 or 3 quarters of recessions. The US declining nearly -9% in the first quarter of 2020. Europe, those sharp spikes of -12 and +12 dwarf the numbers, economic growth numbers in previous periods of about 2 to 3%. In China, the first to lock down, the most autocratic, came out of that recession the fastest and is still continuing to grow. This graphic is from the Johns Hopkins Coronavirus Resources Center. It's really a very, very good resources center. And you can see how COVID moved from China all the way across the world very, very fast. The countries that were declared in June of last year as being the worst affected were in the United States. They're still, sorry, this is October. They're still the highest in rankings in terms of the number of COVID cases. India and Brazil. Google has established an activity index which shows the fast lockdowns and how they was able to bring the first wave to a degree under control. But our problem is that as most countries open, we are seeing a resurgence of the virus, and moreover, more importantly, we are seeing new mutations, particularly in South Africa and the UK. But 1 year on, the pandemic continues to rage. What we see here is America is in the reds, Europe is in the purple, and then Southeast Asia in the green. So this is as of the end of January 2021, so it's very, very current. From the Johns Hopkins coronavirus site, I took the numbers of deaths per 100,000 people in a lot of the countries. And the interesting thing is we start with Taiwan here with no deaths per 100,000 people, all the way up to the highest one is the UK. And this is as of the end of January of this year. What struck me about this particular chart is that all those numbers which are less than the world number of coronaviruses per 100,000 are sitting in China, Southeast Asia, and the Middle East. And the countries that are the worst affected are the Americas, the United Kingdom, and Europe. And I think that this is no accident, in the sense that the countries that were applauded for their best handling of the COVID-19 response, and this is in June of last year, were Vietnam, Malaysia, Taiwan, and Australia, and later on New Zealand. And the countries that were considered to be the worst were all in the Americas, and the United Kingdom, and Europe. I've taken the same graph from the previous slide and just showed it to you as an area graph. The orange is December, and the blue is January. And you can see how the gap is even widening further in these countries. And it is also interesting to note that if you superimpose this graph with the COVID graph, that the COVID is spreading the fastest in those countries with the better states of democracies. And that is largely because other countries are able to be more autocratic in locking down their people. So what have been the what I call the rapid adaptation results from the COVID virus? So first of all, remote working. We went to remote working very, very quickly. These are quotes from Twitter and from Facebook. During this time, we found that most Facebook employees would productively work remotely. Even before COVID, we had long-term goal of enabling more remote work, since the ability to feel presence even when you're in remote is a core aspect of our own product. And as time goes on, many corporations who thought that this would be a temporary phenomenon are now moving their back to work, back to office procedures further out. Interesting enough, this is a graph of Zoom, the Zoom share price, and you can see that from January 2020, how the share price accelerated as more people went on to what we're doing right now. So remote work looks like it's in the process of becoming the new normal for companies that can. Amazon, they are allowing their employees who can work from home to do so. They've just extended this through 2021. Communication services, information technology, Twitter and Square are allowing people to work indefinitely. So this is because of the advance of digitization, we're now able to see that people can work from home. As an aside, at ASEAN, we've been working from home since about March 6th of last year. And at the end of hard lockdown, one of my colleagues said to me, "Dee, I really think I need to immigrate." And she immigrated to Scotland. I said, "Well, that's no problem. You've been working remotely in Cape Town. You can work remotely from Scotland." So every morning the printer starts whirring away and working from Scotland. So it's absolutely amazing how it works. Remote working has had another effect as well. It's accelerated the survive and thrive service-oriented companies and countries. But if you have a look at the unemployment levels around the world, the highest unemployment level was in the leisure sector. The next high unemployment level was in the mining industry, at about 17 degrees on June 2020 numbers based on America. But look what it did to the commodities or to the commodities indexes. It has powered from the beginning of 20 a major bull market, in part because of supply disruptions, powered a new commodity boom. The next rapid adaptation is decentralized technology. And there, if we're looking for opportunities going forward, we must look at countries like South Korea, which has got the most innovative economy in the world, followed by Singapore, Switzerland, etc. In fact, it's very interesting how powerful Southeast Asia is becoming in this digitized world of ours. We all know the rapid effect of the next adaptation was from retail to e-commerce. Malls were empty. You can see retail sales falling dramatically in March of last year. And certainly the graph on the left here is Capco, which is an international travel company, and shows you the impact of that on its share price. And in addition to that, we have mass person process booming up ahead as e-commerce. This is going to be, I think, a permanent adaptation for a lot of companies. So these were rapid early adaptation methods that were adopted. But COVID has long-term consequences. Massive unemployment and bankruptcies. Leisure and travel industries totally decimated. It's also shown up the weak links in our societies. Healthcare, it showed up how inadequate our healthcare systems have been. We've seen accelerated research for a vaccine, and it's come out quite quickly. The introduction of telemedicine, but COVID has also shown up the very huge inequalities in our societies, both in terms of levels of mobility, but also in terms of gender issues. And economists are now saying that the economic consequences of COVID are far worse than the global financial crisis, which was in 2007 to 2008. In fact, people are now saying that the economic fallout is probably the greatest since World War II. And then we had the Marshall Plan, which helped to rebuild Europe. But this time round, because of this virus, there is no physical damage to infrastructure. So how do we stimulate an economy with infrastructure when there is no physical damage? Well, around the world, they've come up with two plans, and governments are virtually united in this. One, creating huge fiscal stimulus plans, putting checks into the pockets of people who've either been furloughed or have been taken out of our work, and adopting an economic stimulus package of greater recovery that builds back better. And you'll see that Biden has actually named his infrastructure restart program as Builds Back Better. And a lot of other countries like the UK are adopting the same methodology, but in sense giving them different names. So what does this fiscal stimulus plan look like? Well, taking these top 20 odd countries, and we're having a look at this as a percentage of their GDP. So it's not the highest value in dollars, but a percentage of GDP. Japan leads the way a package of 21.1% of its GDP. Canada, 16.4%. Australia, 14%. The United States, 13.2%. And so we go down to Mexico at 0.7%. South Africa doesn't really feature on this map, and you'll see that why that is later. Here is the same information projected in a different format. This is in actual dollars. So the very dark pink red is where there's more than 10% of GDP. So we see Germany here at 189.3 billion, China 169.7 billion. Australia, they've got an NA. Sorry, not Australia. South Africa, they've got an NA. And in a period about that, I think that our economic stimulus package is got to be far too small, and it is not stimulating anybody but the employed people at the moment. So there is some question mark about our stimulus package from an international perspective. Quite a nice website is how much .net produces nice graphics. So yes, huge stimulus packages. This is leading further to suggest that perhaps this is the beginning of a more socialist approach to capitalism, if one can talk like that, and maybe the start of universal basic income. Elon Musk was quoted a few days ago, in between his mutterings about Bitcoin. He was quoted a few days ago saying he believes it's essential going forward to have a universal basic income. This was as a result of a survey done by the World Economic Forum in July 2020. And here are some of the comments. It's on a scale of 0, which is strongly disagree, to 5, which is highly agree. So for instance, 3.2, on a scale of 3.2, the depth of economic transformation needed will be require reform and institution building on a post-World War II scale. Government direction for innovation will be critical in creating the new growth markets of the future. So we're not rebuilding damaged infrastructure, we're taking a different path, and these impetuses were already in place. You can see a lot of them stimulate measures to combat climate change, etc., etc. But this universal basic income, I think, is going to become more and more important an aspect going forward. On this OECD website, tackling the coronavirus, they come up with this graphic saying we need to align with net zero carbon emissions, strengthen climate resilience, reducing biodiversity loss, etc., etc. And I'm just quickly looking at a couple of themes here. 1, moving to net zero carbon emissions. 2, green energy. 3, improving supply chains. What we realized during the height of the crisis that a lot of the manufacturing was in China, and of course that lockdown, and corporations realized that they actually need to localize some of their manufacturing to avoid bottlenecks like this in the future with extreme either virus-related or climate-related events. And then digitization. If one looks at the proposals already made to move to net zero carbon by 2050, these are the countries that have signed net carbon commitments into law. So breaking these commitments would cause illegal events. So Sweden 2045, United Kingdom, France, Denmark, New Zealand, Hungary 2050, China by 2060, and Japan and South Korea by 2050. There are only 2 countries that are already net, according to this organization, are a net zero carbon situation, and that's Bhutan in South America and Suriname in Southeast Asia. So this has now been hooked onto the Build Back Better programs that are now coming around the world. It is also interesting to, and this is a McKinsey Nature Analytics slide, to observe that those with the highest potential for low-cost natural climate solutions, NCS, are in the Southern Hemisphere. And I quote on the screen here, well, the bulk of the low-cost supplies in the global south is not the value action in the global north. So we see Indonesia at 15%, and Brazil at 15%, the United States at pretty low, 2 to 3%. So the information here is that the geographical growth and the recovery in the economies is likely to be in those maybe less democratic countries and those emerging market economies where the greatest growth potential is likely to be. These are not trends that are new trends, they are trends that are being accelerated by the COVID-19 virus. So if one has a look at green commitments, and this I got from a lovely website called Carbon Brief. It's looking at green economy. I show you the link just now, but this goes by country. So for instance, in Chile, they have already implemented a very small greening plan, but they've plant trees on 24.1 thousand hectares of land and invest in better fire management. You can go through these in your own leisure, but there are a lot of them, of all the plans that have either been agreed, proposed, or implemented. So in the UK, 2 billion Green Homes Grant Voucher Scheme to fund home efficiency improvements, such as installation during financial year 2021. The vouchers will cover up to 2/3 of the cost of work. An energy efficiency program to make public buildings greener, including schools and hospitals. If one has a look at Italy, they've got an eco bonus scheme which offers 110% tax deductions for the private installation of energy efficient retrofits such as heat pumps, as well as solar and storage in homes as a part of heating and cooling. So these are all programs that are underway. Green Jobs, a European Commission proposal for a 40 billion euro just transition fund to alleviate the social economic impacts of the transition has been scaled back in the deal. So that was agreed. It was quite a lot of money, 21.19 billion, but scaled back slightly. New public sector loan facility in the European Commission's proposal, which forms the third pillar of the just transition mechanism. So you can see how different languages we use in different countries. So in America, it's build back better. In Europe, it's the just transition mechanism. And there are a lot of these proposals in place. If you have a look here at the website at your own leisure, it's carbonbrief.org, tracking how the world's green recovery plans aim to cut emissions. Very exciting stuff. The third major thing was digitization. Interesting that in 2020, internet usage jumped by 70%. The use of communication apps doubled. Video streaming services have seen daily usage almost double. There was a 146% year-on-year growth in April 2020 of online retail orders in North America. China's online education market is expected to more than triple to $99.3 billion in 2023 from 2019. 48% of employees will literally work remotely in the future going forward. So the 10 principles of Build Back Better are basically new goals, socially just and ecologically safe, green infrastructure, protect environmental standards, universal basic services, and guaranteed livelihoods. That's the start of the universal basic income. Better democracy, and there are concerns, there are many conspiracy theories, which I'm not going to go into in this presentation, that deal with these principles and give them a more perhaps sinister color, but I just believe in looking at the numbers and seeing what's happening on the ground. So that is how COVID-19, or the damage caused by COVID-19 to the economies, is being turned to advantage to help economies grow in a more sustainable manner. I think it was quite wonderful to watch as the world shut down. There were pictures of the sky in China pre and post the lockdown, and how you could see the pollution over large parts of industrial China simply disappearing as the lockdown ensued. Behind all of this, and COVID has been a singularly triggering economic loss event, behind all of this, the global economy is changing. So if I'm going to look at the outlook for the global economy, I cannot just look at the OECD and America, because that's changing. The world's biggest economies in 2019 were China, followed by America, followed by India. And you can see that in 2020, Statistica was projecting the American economy to shrink by 5.9 and the Chinese economy to go up by 1.2. But the big continental shift that is happening is that whilst in 2008 you had a similar ranking table, Japan fell after India, but look at Indonesia, projected to come up to from its current number 15 in the world economy to number 5 by 2024. And there are a lot of drivers, notwithstanding COVID, that are actually accelerating that pace. Let's have a look at the Southeast Asian member countries. We've got Brunei, we've got Malaysia, Vietnam, Laos. This is a very, very important group of countries in the world from the point of view of economic growth and rejuvenation of world growth. Let's have a look at their population. Well, China's got the biggest population, followed by India. And we've got Asia, these countries. This graphic down here says 637 million people. And this one is more up to date. It says 654 million people. The largest of this is Indonesia, at 266 million people, followed by the Philippines at 108 million. the combined GDP, nominal GDP is $3.1 billion US. Look at the GDP per capita, they're quite poor. To put this into perspective, Brunei is the only economy that is close to the American economy in terms of GDP per capita. America's is currently about $66,000. You've got Singapore here, also much better standard of living in Singapore, very, very wealthy there. But a very important block in terms of where the next economic growth numbers are going to come from. Now, the Asian economies are looking at three big themes, or I've extracted three big themes for the outlook. One is what is happening with urbanization. Two is the rising middle class. And three is digitization again. This is becoming our theme, not only in terms of our short-term reaction, our rapid adaptation in phase 1 of COVID. Digitization was there. In the second greening theme, which is longer term, they build back better. Digitization is there. And it's a big, big theme in digitization, is a big theme in the Asian economies going forward. Let's examine each of these in a little bit more detail. Urbanization. Well, according to these graphs here, the top left one, 82% of North America is already urbanized. Where the urbanization percentage is less than the world is in Asia, not surprisingly, 51%, and in Africa, which is 43%. So it seems to be logical that the next wave of urbanization should come into those two economies. Now, COVID may put a temporary barrier to urbanization as people are able to stay in rural areas, particularly because of digitization. But it is a trend that has nonetheless been happening for 50 or more years. I mean, according to this graphic, about 2030, about 60% of the world's population is expected to live in urban areas. And here we're talking about the theme of smart cities as well, again, using IT and digitization to stimulate growth and improve quality of life. I think that what we've seen as a result of the COVID-19 virus is that going forward, there is going to be a theme of providing a better quality of life for people in countries, whether it be by universal basic income grant or whether it be by improving living conditions. The biggest driver of economic growth and corporate growth is a rising middle class. As people move from low middle class up to middle class, rising middle class, and the theme of that, we see that they start becoming more consumer oriented. And we could call it consumer capitalism in a way, in the sense that organizations and corporations are targeting those countries where they can sell the most McDonald's burgers, KFC, Coca-Cola, etc., etc. So rising middle class, we need to know where that demographic is. So if we have a look at the Asian middle class, this again is from Statistica, a fantastic website if you want to have a look at graphic visualizations of ideas. So in 2020, 54% of the world's middle class was in the Asian Pacific area. 20% was in Europe, 17% was in the Americas. It is projected that by 2030, only 10 years later, the Asian middle class will grow by 15%, so from 54 to 65%. So that is a massive, massive growth rate, and one that corporations will be looking at in terms of identifying growth opportunities to increase their profit profile. Next, we have digitization. This was an interesting study done by the World Economic Forum with Asian youth. Now, they define Asian youth as Asians in the age group of 16 to 35 years of age. And they're asking various questions like, I use the following digital tools for the first time during COVID-19. 52% of them said they use social media for the first time, more and for the first time during COVID-19. They have online education, 45% of them. E-commerce buying, virtual meetings, video streaming, e-banking, the list goes on, digital government, e-wallet, video games. travel apps, not very many at all, less than 10%. Now that in itself is an interesting metric, but if one has a look at the one below it, it says social media, okay? How permanent are you going to regard this usage? 71% of them said this is going to be a permanent change in my life. I'm going to use social media a lot. Online technology, e-commerce buying. 72% said that, well, of the 40 odd percent that said they use it for the first time during COVID, 72% of them said they're going to carry on with that behavior, continue to use e-commerce buying going forward. So there's a sea change here that's happening. People are using communicative devices more than ever. These slides come from BlackRock. Southeast Asia is quickly emerging as the next digital graph. Since 2015, the region has added 114 million internet users. That's from data from Google, Temasek Bank Company in November 2020. 70% of the region's 58.3 million citizens are now online. Sorry, 583 million are now online. 70% of them are online. In the Philippines, they spend more than 10 hours a day on the internet, 56% longer than the global average. Interesting stats. And here they note as well that Southeast Asia has many of the pieces that need to become a technology-driven powerhouse. If it maintains its current trajectory, the region could give birth to some of the world's next tech giants. They have a young demographic. The average age is 30.2 years old. They have rising income levels, 50 million new entrants to the global middle class by 2022. And they've got 100 million new e-commerce members that have been added since 2015. World data here is World Media Bank Company and Temasek again. So that was the exciting part of the presentation, I think. How does this evolve into let's having a look at the numbers? Well, I think that I have shown through graphics that the global growth is going to be more driven by emerging markets and frontier markets. And we can see this is a JP Morgan February the 12th quite recent forecast. Emerging markets, which probably only shrank 1.4% last year, are projected to grow 7.6% next year, sorry, in 2021, this year, and 4.8% in 2022. So this looks very much like me to a V-shaped recovery, as we saw with the Chinese growth that I showed you at the beginning of the presentation. So they're saying that global growth dropped by 3.6% last year. The IMF says 3.5%. They're saying global growth will accelerate by 6.1% this year, and then moderate slightly to 4.4% in 2022. These forecasts are predicated on a couple of things. One is that the vaccine rollout is successful, that they were able to actually increase the mobility of people without new variants coming forward, and that the greening spending is sustainable as governments stick to their targets. But what notwithstanding that, even should these numbers be too optimistic, it doesn't detract from the fact that it's the emerging markets that are the place that are going to grow. And emerging ex-China is just slightly less, 6.1 versus 4.2 for 2022. The United States is projected to grow this year from 5.3%. These are revisions that are being pushed upwards over time. United States retail sales are absolutely booming at the moment, even if they're not coming from the traditional malls and shops. The e-commerce sales are actually booming. Canada is also growing rather nicely. Western Europe, 7.1% decline for the past year, 5.5% for next year, and for this year, 5.1% for the year after. Italy, also a strong recovery, one of the countries that was the hardest hit by the coronavirus lockdowns. If one has a look at Asia Pacific, Japan, which experienced a minus 5.1% growth rate last year, to grow by 2.9% in 2021. Emerging Asia, 9% for this year and 5.3% next year. Interesting metrics here. Thailand is projected to continue to accelerate into 2022, as is Singapore, whilst the other economies slow somewhat. Indonesia, 5.6% growth for 2021 and 4.8% for 2022. Now we come to emerging Africa and Europe. This is for investment purposes. This is where South Africa is classified for foreign fund flows. This is the market that we compete in. And as you can see, we're not competing very well in this market. The growth in the market is expected to be 4% for this year and 4% for next year. But the downward arrow means that these revisions are being pushed downwards. Czech, which was also one of the countries with the highest spike rate in the second wave, 5.2% for 2022. Hungary, 6.2%. All in the sixes. And we sit here with Russia and South Africa. Turkey is looking at intergalactic space travel. And we're looking at how do we solve the problems of corruption and vaccine rollout in this country. So unfortunately, on a global competitiveness scale, we're not very high, although we do have some green shoots and some proposals that we make as far as infrastructure and green energy, etc., etc. So I've gone through this in record time, I think, so there will be time for questions. What have been the consequences of this global spread of COVID around the world? And I've put them into three groupings. One is the early adaptation, what I call early adaptation, which is remote working, which is becoming a way of life. E-commerce, which the Southeast Asian people tell us, or the youngsters tell us, that's going to be a permanent feature of their world. And decentralized technology or digitization. The next sea change is fiscal policies that are being implemented, leading to universal basic income, and the Build Back Better programs around the world, whatever you call them. And then finally, the new markets that are emerging, particularly in Southeast Asia, where the themes are urbanization, a new middle class, and digitization. So looking at the IMF graphs, I showed you the JP Morgan ones. In 2020, there were only a handful of countries that showed positive economic growth. Those are highlighted in blue. Some of them are India, 1.9%, China, 1.2%, Indonesia, 0.5%. The forecast in June last year for economic growth in the world in 2020 was -3%. And in January, they've changed that to actual -3.5%. They're forecasting the global economy to grow by 5.5% in 2021 and by 4.2% in 2022. Advanced economies, I call them developed economies. Again, you can see not as great as the world economy. And here is my theme here, the emerging markets and developing economies, 6.3% for 2021 and 5% for 2022. And that's from the International Monetary Fund. Unfortunately, their data on the individual regions, so for instance, Asian and China, is not yet available in this format. But hopefully it will come through in the next couple of weeks. We will go on the website and have a look at that. So it's a world of change. It's a world of very, very rapid change. A lot of these changes were happening already. We were going in that direction. But none of us, or very few of us, believed it could actually happen so quickly. I mean, I've known that we work remotely for a few years now, but it's difficult to change and it's difficult to implement new ideas sometimes. And I mean, we went to digital within 2 days in terms of working from home and now being able to operate from basically Scotland and South Africa. So I believe that, yes, the future is still, we can't project the future. These are educated analysis, or the results of educated analysis, I would like to believe, on the economies. But we've had a rapid adaptation to current situations. But the economy is moving, I think, away from pure capitalism towards a hybrid breed of something like a socialist capitalism, which doesn't have a name yet, which is why we're talking about universal basic income and building greener and building back better. But the basic themes that have been in place, that of urbanization, increased middle class, and digitization, are only but accelerating, creating new consumers around the world. And if you create new consumers, then corporations have earnings growth. And if corporations have earnings growth, then share markets perform really well. And we've seen that in terms of the recovery of the markets to new highs after the COVID shock has been quite fast. In fact, to the extent that we're starting to worry a little bit about a bubble being in some of these markets going forward. So I'm going to leave you with that thought of how we are changing in this rapidly evolving economy of ours to new ways of working and new ways of thinking. And I think that there's now time for some questions.
Okay, Sorry, thank you very much, Dee, for that presentation. Very interesting indeed. We have two questions at the moment from James Porter. So the first one, he's asking, in terms of the slide about global renewable energy potential, where there was North Africa and South Africa not featured, was this because they were not surveyed?
I can't hear you very well. Can you just speak up a little bit and slower, because there's a bit of feedback there.
Okay. So in terms of the slide about global renewable energy potential, where North Africa and South Africa were not featured, is this because they were not surveyed?
I cannot answer that question because I did not do that particular survey, but I can, if you just keep a note of it, I can respond via email.
Okay. So then the second question is also from James Porter, and he asks that he noted that the UK is headed to a 7% increase in 2022, and asks, is this not a...
I can't, your words are running into each other. So if you could just speak a bit slow, because I can't understand the question, I can't get it.
Okay, sorry, Dee. So James Porter is asking that he noted that the UK is headed to a 7% increase in 2022. Is this not a lower risk investment environment?
Is this not?
A lower risk investment.
You know, this really is not working because I cannot hear your questions. The words are running into each other.
Okay, maybe I can read the question to you. Can you hear me better, Dee?
Yeah, I can.
Okay, so again, James Porter asking the question, noted that the UK is headed to an increase of 7% in 2022. Is this not a lower risk investment environment?
Lower risk than what? Than emerging Asia? Probably a lower risk than emerging Asia, because Asia is more autocratic and foreign investment tax to be turned on or off. The purpose of this presentation is not really to say these are preferred investment areas, but largely to say, yes, this is where the growth nodes are likely to be. Notwithstanding the risks involved there. It could well be a better, more safe investment, but also we don't know how Brexit is actually going to evolve with the UK being out of the EU. So yeah, I think the point to make here is that every region has its investment risks, and one just needs to quantify them, whether they be investment risks in terms of corporate governance, in terms of ESG, or in terms of legislation, or in terms of capital floods. So yes, I hesitate to say which one is better than the other. It aims for a different risk profile.
Okay, thank you very much, Dee, for the presentation, and thank you everyone for joining us this webinar. Yeah, so that's the end of this. Okay, thank you very much, Dee.
Thank you, Dee. Bye-bye, everyone. Thanks for joining today.